Hey everybody, how you doing? Jeff here from 40 Finance Channel, talking about the stocks that I've been buying over the past 30 days or so here in November of 2021. I've got some allergies going on, so you have to bear with me on that. But I'm sort of excited to show you guys we've had a lot of different moves recently in the market. Most of them, for me, to be honest, have been a little on the negative side. However, I'm not giving up and putting some more money to work here today. And so I wanted to go through some of my picks here that I've been buying into. And the most, I guess the most interesting one would be on the sell side, stocks that I sell, which does not happen very often that I sell stocks. I've sold more stocks this year probably than I have sold the 3 previous years before that. I usually get in and stay in for a longer time, but with some of the negativity that's hit on stocks like PayPal, Zillow, etc., I decided to take some profits. So first one on the board today, what's going on, Montero, is TAP. Molson Coors. I sold out of my Molson Coors position right around this price. As a matter of fact, $46 or $47. This is one that through a cost basis restructuring, I was in about the $34 range. So I sold my 100 shares, made about $1,000, something like that. I also collected a few dividends from Molson Coors over the time that I've had it. So really the big thing with them is not so much that I thought that they were doing bad. It was really just a limited growth potential going forward. They had, like everybody else, pandemic problems. This year was a lot better. They caught on and fixed some of the problems that they had. And you can see this chart. Let's try 5 years. Well, you can see what's happened with the arrival of craft beer and the general beverage market. Then we get down here to pandemic bottom was about 33. I picked mine up in October. Those have since went as high as $54, $58 in the summer. I thought it would keep going, but it didn't. So when there was a little bounce back here recently, I decided to get out. Looking at TipRanks in terms of what do other people think about the future of TAP, and you could see starting to get a little bit of negativity coming back in, a lot of holds, a lot of sells, and I just decided to book the gains while I had it, and it was a good run with TAP. I drink a lot of Coors Light in my time, so I'll miss it, but you know, sentimental doesn't get you very far in this game. All right, let's get into next. First, I'll say hi to Free NIU. Black Andrew, how you doing? Black Andrew likes Bud more than Coors for a stock. Drink way too many Coors Lights though still, yes. So I'm not a big craft beer person. You know, I understand why people like it, and it's a big phenomenon. It's definitely not good for Bud and Coors, but, you know, I'll continue to support the enterprise. However, I'm just getting out of the stock for now. Not enough growth rate. So if you guys watch the videos, you know that the key things that I'm looking for here over time is double-digit growth on the top line, double-digit growth on the bottom line, for the foreseeable fiscal years. Molson Coors does not have that anymore, so they really just do not qualify for what I'm doing. All right, stock number 2. Type it in here. This one you probably know if you watch some of my videos. And that is Zillow. Let me get it up here on the screen. Just gotta make an adjustment here. All right, Zillow, and I own ZG. I don't think it really matters in the end. ZG is the original. It's the Class A shares, voting rights, trades very close. You can see Z right here, 64.35. They trade very close. I don't think that there's really a difference. I just picked ZG. And so my journey with Zillow started in October when they announced that they were not doing the iBuying anymore, somewhere around Halloween. Took this first step down into the 80s, and I was like, hey, I don't care about iBuying and house flipping. That was a losing proposition for them. So I was like, I'm in. I've been looking at this stock for 2 or 3 years now. So I bought in the 80s, and I've averaged down. I'm going to show you the full transaction list for the month here in a second, but I just want to like highlight the stocks first. So it is running below my cost basis right now, but it looks to have found a little bit of support here in the $65 range. And I would likely add another 100 shares or so if it kept dropping, because this is easily at least a year rebuild, if not 2. I feel good about it. The only thing that they lost was a division of their company that was losing money. So they'll have to write stuff off. They were so smart to do a lot of this stuff before the end of the fiscal year. So now they can work it into their corporate taxes, get the write-off, and start building towards the future. And they have already started selling houses. Let me see here if I can catch a headline. And they don't have anything. So they sold 2,000 of their houses to a firm in New York City. The rest of their houses, they are going to sell on their own. So I wish I could show you that headline. It's not. Oh, here we go. Zillow agrees to sell 2,000 homes as flipping business ends. This is not the full inventory. I believe the full inventory is 7,000, something like that. But it sold 2,000 of the properties. I'm all good with that. Just get them out of here. Let's start rebuilding for the future. And I will remain bullish on Zillow going forward. Be interested to see how they do. Everybody has a mixed reaction to this particular situation. A lot of folks were excited about the iBuying slash home flipping business. That was part of the reason they got in. They saw Zillow stock go to $200. I was not in during that time. So little different perspective coming from me, but I can understand. I got a lot of comments on my Zillow original video, and I can understand why people are upset. And I can understand why people are like, hey, this management is too flaky for me. Totally makes sense. I'm just coming in from a different angle, and it looks like this might be my own version of flipping a house, right? A distressed business. We'll see if they can get things back together, and maybe I'll profit. We'll have to see. Since I showed it for TAP, let's type it into TipRanks here. Here's what the one-year outlook is from analysts anyway. You got holds at 65. That just came in 5 days ago. 86 for a hold. 78, 95. Like I said, the 65 seems to be settling in. I'm going to give it some time. But I will, if needed, average down to this price by buying more. I'm not in a hurry to do it all in the same day. All right, moving on to the next stock. It's another one that got destroyed this past 30 days. Magnite, which basically is a ad tech company. They are on the sell side, so they manage the inventory of partners such as Disney and ESPN and many others. And Magnite, in my opinion, had a relatively good earnings report. 6 months, here's a year to date. However, it didn't gain traction in the news. And then, of course, Disney came out with a mixed bag yesterday or the day before. And Magnite has some ties to Disney, so it fell. I'm okay with it. I was disappointed. I'm averaging about $29, and that's from an average down perspective. 22, not sure how much I'll add here. We'll see the size of the position is getting relatively high for me, close to $10,000. I don't know if I want to be that in on Magnite, but I am comfortable for the long term. Just trying to see if we could, maybe this article has it real quick. Just a quick review of their earnings. Magnite's revenue of $131 million was up over 100% year over year, but that included the results of several acquisitions. Excluding traffic acquisition, revenue grew by just 26%. So people are lumping in the fact that they bought a company, and when they bought that company, they paid for that company. So there's your traffic acquisition costs. But I think that with Magnite, once this whole world of conglomeration that they've put together actually gets on track, I see it as a positive going forward. I also see that the advertising world is stuck right now due to supply chain issues. Let's see what, got some negative. I love all these negative points because it just reminds you of what you need to do. At the midpoint of fourth quarter, Magnite focusing on 140 million. That's slightly below consensus. So mounting losses, cancellation of ad campaigns. This is due to like automakers and stuff who are pulling back because of supply chain. Tepid fourth quarter guidance combined to drive Magnite shares lower. Time will tell whether these issues will moderate over time. I'm banking that they will. So I've talked a lot of ad tech here recently. Trade Desk is on my radar. They blew it away. So I would say the environment is healthy, but we do have some weak spots, and Magnite's in a weak spot right now. But their ties to connected TV, their ties to buying other businesses that are similar to theirs. I like where they're headed, but let's be fair. You know, you're probably a year or two away. I sit at $29. You're probably a year or two away from really seeing it. So I'm not sure if I'd recommend that stock to my best friends. However, I'm very happy with where I sit on it. Taking a look at TipRanks, you have, let's see, 3 days ago, you got a few coming in, 45 on the buy, 33 on the hold, 37 on buy, and then 70, Laura Martin, who's one of the biggest connected TV bulls there is. She's in at 70. So maybe somewhere in the middle of there. I'm happy to wait it out. All right, just peeking in on comments. MW, how you doing? Wayne Yim, morning Jeff, love your videos. Glad you could join us. You're talking about PaySafe. I will talk about PaySafe, just not right now. MWY, Magnite keeps tanking, but TTD and PubM always going up. PubM has probably the strongest fundamentals in ad tech group in terms of like profitability and stuff. Now, so they're on a strong foundation. They're not growing nearly at the same pace as Magnite. Trade Desk is obviously a super fan play, momentum stock. It's traded way above its valuation for months on end now, months on end. Will it ever take a dent and come down? I would probably buy it if it did. I got very, very close at $68-ish. But I thought that, you know, Magnite's earnings were mixed. Maybe Trade Desk is mixed. That wasn't the case. They blew it out of the water. Congrats to everybody who has got in Trade Desk early and stayed in it. You're awesome, and I'm sure you're not going anywhere out of that one. MW, I do not hold PaySafe. I sold out around $10. So just to tackle that one real quick, because it looks like that's probably why you came here. Let's put it into perspective. So this is a SPAC that went wrong. I like the story of PaySafe, which is basically a payment processor similar to like a Visa or a PayPal, and sits almost exclusively in gambling and gaming. They have digital wallets. They have certain things that they connect to like Microsoft's platform for Xbox. They have a lot of good stuff. Unfortunately, they're not producing results. And somewhere around the $10 mark this year, I think I was in 13, 14, something came out in the $10 range. And I just was like, you know what? This company isn't growing. Like, it just continues to have earnings reports that are all but flat. Now, it does look like maybe you'll get profitability next year on a low level at 14 cents. But this is what the killer is, and this number fluctuates wildly. When I first got into PaySafe, the revenue estimates from the guidance in their earnings reports was close to 15-20%. All right? And not a month ago, this was over 10%. Now you're down to 7%. So how much further is this growth rate going to fall? And that's what's happening here. So I like the stock in terms of how they're integrated into the world. Their performance, though, has been suboptimal, to say the least. And I think that that's where you see the sell-off. All right, Lions here buying Baba. I was looking at Alibaba last night. I don't typically hold standalone Chinese stocks, but KWEB is one ETF that I would consider there. Okay. All right, so what is next on my list of buys? Actually, I have to flip through as I am forgetting. Oh boy, guess who went back to the well? On Rocket. Not by much. I added about 20 shares, 10 shares, nothing big on Rocket, but I came to this conclusion with Rocket that the stock is not going to get better in the short term, but the company is good. And I had to stare at it for a long time, and I thought about selling. My average was in the $19 range. We've talked time and time again on this channel about what's going on here. You have declining earnings because of declining mortgage volume. So the company is not bad, but the company's earnings are going down, not for mismanagement, just due to market conditions. And so is revenue. So I kind of put a number in my brain of like, when would I buy or sell Rocket? I don't think the company is a loser company. I really don't. So I just decided that I bought the company too high. I am not in a hurry to dramatically expand my Rocket position, but when it dropped into the $15 range, I bought 5 or 10 shares, and I feel good about it, to be honest with you. And I realize now that 2022 may be another losing year, okay? But I think eventually over time, 5 to 10 years from now, if Rocket sits in a dark corner of my portfolio, and perhaps they'll start issuing dividends like a number of mortgage providers do, I think that it's a good bet for the price. There's worse stocks in the world that do not have the supporting fundamentals that Rocket does. We'll see where that all sits, but you know, for now, I took a gander on a day that I was feeling sorry for Rocket for doing so many good things and just not being able to produce for investors. However, they did give me a $300 special dividend this year on my shares, so maybe they'll do that again. We'll have to see. All right, guys, this one is really pissing me off. PayPal Holdings. I've been on a tirade about it. I'm in at 192, I believe, and I bought 5 shares yesterday. I will be buying 5 shares either today or Monday, and I don't care. I'm shocked at the stocks that go up in this market, and I'm shocked at the relative meh outlook for PayPal. So I believe in it. I believe they have good things coming to them, and so I'm going to keep buying, and I have no plans to sell PayPal for a very long time, unless there was just some sort of nutso scenario where it went to $500 tomorrow. Then I guess I would have to think about it. But you can watch my PayPal video from yesterday or the day before to get my thoughts. But that was the last stock that I've been adding here in November. There is one, and if Lion is still here, Lion's at 50 on DK. So Lion is Canadian. I believe he still lives there. But I have been thinking about this, and that is Voyager Digital. Behind the scenes for me, okay, I'll tell you why I like this stock. Actually, I don't even know if I really like this stock. But let me just say one thing. Behind the scenes, I am building a very small crypto portfolio. I have tried numerous little wallets and investing places. And I signed up for Voyager because Mark Cuban is an investor. I don't think if we'll see this. Let me type something in Google for you. Cuban Voyager. So I came across this one day. I don't believe that this is still going on, okay? So this was in late October. $100 if you deposit and trade $100. And I was like, you know what? I'll take $100 of Bitcoin for $100. And so that's what I did. And with Voyager, I really like it. So number one, I've struggled to find a place. I can't, guys, I do not want to get into crazy crypto world. I do not want to get in super deep. I want to own it. I believe that there's some future there. It will be Bitcoin. It will be Ethereum. Maybe one or two others tops, but Voyager lets you own it. It lets you export it if you need to. I probably won't do that, but I've started a small collection in there that I'm going to share on a different video, talk about my thoughts, but Voyager's decent, and so I was thinking about doubling down and buying the stock as well. It's a Canadian stock, oddly. So that's why I was calling out Lion. It does trade on OTC here in America. It also trades on Toronto Stock Exchange. Still thinking about it, but I may be buying some Voyager Digital just for the heck of it and just doubling down. I see a lot of holes in Coinbase's future market share in the sense that the high fees I don't think are good, but we'll see. Coinbase deserves a lot of credit for what they've turned themselves into, and they are a profitable company. Voyager is not profitable yet, but I think I'm interested, so we'll see. All right, let me get a drink here. And, sorry, just real quick, I got a notification. Okay. Need to double check that. So let's go down the line here. Black Andrew, we talked about Budweiser, Wayne Kim, we talked about PaySafe. Efren talking about good entry price for MAGN. Yeah, you say $20. I think, you know, that's about, I think, fair. I think it's worth the risk at that point. 1 second here. So if they hit this year, 54 cents, turns into 63 potentially next year, and, 28 to 30% revenue growth. I'm trying to see where this price to sales is. Price to sales right now of 7.15, okay? Forward PE of 30, not too bad. It's a totally different game and not nearly as big, but let's just see our friends over here. Price to sales for Trade Desk, 40x. All right, forward PE, 100x. PEG ratio, holy cow. I didn't even know you could have 13s in a PEG ratio. So nothing wrong with Trade Desk, man. And the market loves it. But if you want to talk about momentum, this is one that rides a lot of momentum. So I like Trade Desk, $68. That's great. I should have bought that. This doesn't make any sense. All right. This just doesn't make any sense to start a new position here. But it's good news for anybody who already owned it. And I'm happy for them. So anybody who was in April 1st, post-pandemic, maybe June 1st or July, $45. Of course, you're rooting for 100, and you got it today. But, fundamentally, I don't know. I don't know what to say. If this company hits next year, you're looking at 87 cents. What was Magnite's growth rate? 28%. Trade Desk is 29. All right, so I just, apples to apples, they're not the same company. They are in the same ad tech world. Magnite needs to keep pushing. However, I do think that there is an opportunity for Magnite to keep growing, and I think that you have to close your ears and wake up 3 years from now, and we'll see what happens. But I like their aggressiveness. I like people who go out and buy other companies, acquisition-wise, to fuel the growth. So that's not for everybody. But in ad tech, that's a really good way to do it because there's a lot of onesie, twosie, mom-and-pop technology shops. All right, what else do we have? Lion, we talked about Baba, also big on Facebook. What is your opinion on UiPath? Sounds like pharmaceutical, biotech, in which case I would have no opinion. But it is not. Let's see. It is sorry, I have to squeeze this in so we can all see what the hell this is. End-to-end automation, robotic processes, primarily United States, Romania, and Japan. Okay, so robotics, I'm guessing. And 12 months ago, it was in the 80s at a high. Now you're down to 53. EPS going the wrong way, but that's just analyst projections. Growth rate from sales of 33%. The EPS trend for next year is it's a positive trend, -7 cents to -3 cents. I don't know a ton about this, to be honest with you. I'm not really super smart enough to understand all the robots in the world, but let's see what TipRanks says. You got, it's been a while, so be cautious on these dates. Last month, 25 days ago. But you do have buys, 65 to 85 would be the high. So there could be something there. I don't want to say too much because I just do not know much about the company. But you would have to figure, in that little quick description that they had, you would have to figure that robotics, automation, etc., is right where you want to be in the world of innovation. How good are they at doing it? I have no idea. Compare them to somebody else in the exact same field. That's where you're probably going to need to go on UiPath to fully understand the value of the stock, the value of its growth rate compared to other robotics/automation providers. So that's what I would do. All right. Sir DraftKings, hey, Lion, DraftKings video tomorrow. I just recorded it. I'm still long, but I'm going to make you watch the video. It is being annoying, but I think that the long game is still there. Thoughts on Penn? I'm not huge on Penn, to be honest. Just to tell you why I prefer DraftKings. So Penn is a much better fundamental stock. Much, much better. They have physical casinos. I believe they have earnings per share. It's just a way better game if you want to go on the things that I normally talk about. All right, DraftKings is a way different game for me. It's a sales game. It's 100% revenue. It's 100% price to sales. No regard for the future in terms of profitability near term. But I am familiar with the platform. I play on the platform. I like the platform, and I've been using it for probably 5+ years. So I'm a big fan. If I don't have a problem with Barstool Sports or anything like that on Penn, what I don't like, particularly during the pandemic, was having physical casinos with mortgages and maintenance and staff and food and beverage and hotel rooms. Stuff sounds good, but I think that that's a declining industry very, very slowly over time. DraftKings is focused on the power of bets on your phone, micro bets, iGaming, sports, daily fantasy. That's a world that I understand, and I like that they don't build big hotels that staff thousands of people in a time when travel is so choppy. So nothing wrong with Penn, and I bet you without looking, if you stacked Penn's fundamentals against DraftKings, the Penn would be for sure the winner on a fundamental analysis. But you know, everybody has a stock or two that don't make sense. DraftKings is my big doesn't make sense bet. We'll see what happens. All right. Mr. Mughal is here. Good to see you. Sarik, Jim Cramer Action Alert, started PayPal position at 260 as long-term. Then short position after it fell to 229. That's hilarious. Obviously, I don't play the game like that. I will say my two biggest positions, PayPal and Visa, hovering in the $200 mark. I think that those are quality stocks that you could buy now for the long term. I don't know when the next big run-up is going to be, but we got some really good news in Visa land. 1 second here to pull up the article for you guys. All right. So MasterCard just came out with some new data. This is not an earnings report. I don't think this has anything to do with earnings. But you see the headline there. I'm trying to make it bigger for you. Just a couple days after U.S. eased restrictions on international travelers, MasterCard released new long-term performance goals. Okay, blah, blah, blah. Where is... We care about cross-border travel in this game with Visa and MasterCard. Here we go. The trends are super encouraging on cross-border travel. These are the most profitable transactions in payment world, okay? So that's why it's such a big deal. MasterCard CEOs, specifically 20% of the top global markets from cross-border perspective are currently at 70% pre-pandemic, 30% upside. Meanwhile, large markets like US, UK, and Canada are only half pre-pandemic. Now that's half for cross-border, okay? It's not half of travel, so I get it. You go to the airport, the lines are long, everything's stupid, but that doesn't mean those people, like here in America, people in Ohio, where I live, or probably go to Florida all the time this time of year. It's starting to get colder. You know, my nose is like getting crunched up with all the leaves and shit everywhere. If you live in Canada with Lion, you know, you probably are looking for a southern spot. You could do cross-border travel there, but, you know, Canada was locked down for a long time. So we need to get cross-border travel back, because it's not just the consumer who pays a slightly more expensive fee, but what ends up happening is the merchants. All right, so if I own, I'm just going to make this up, if I own a hotel in France, just for the hell of it, and my customer comes in with an American card for my hotel room and swipes that card, Visa does all the back-end stuff and charges the merchant for the transaction, but pays the merchant in whatever they're doing with money in France, right? Euro, I guess, whatever. So that's what makes Visa valuable. That's what makes MasterCard valuable amongst so many things, but getting people with a unified card, right, until they take Bitcoin and at the hotel in France, you know, your Visa card is a safe bet. That world's coming back. This stupid article that I just put up here for you guys is monstrous. Good news for Visa, MasterCard, and PayPal. A lot of people don't know, does a lot of cross-border too. So they have a lot of services cross-border. So if you think about outsourcing, anything, outsourcing, think of like Fiverr, right? Certain tasks that you need done. I mean, there's people in other countries doing those, and they're getting paid through PayPal, and they're paying cross-border and conversion fees and stuff. So we need that world to get going. Very confident that it will. Aaron Schill, Efren and Tesla. Wrong channel. I'm sorry. I missed it. Congratulations to everyone in Tesla world. I was a doubter, and I'm talking like 2-3 years ago, and through this past, I've always been a doubter of Tesla's stock price being able to hit the level that it has. I've been wrong 1,000 times. I'll never pretend that I wasn't. And I think the most impressive thing about Tesla is I've never in my life seen a company hit goals, outrageous goals, like they had without a single negative headline. I've said it time and time again here. Tesla's a negative headline away from being down 25, 30, maybe even 40% from a fundamental perspective. Those negative headlines have not ever hit. They've had like a couple, like, they missed production by 5%. You know, a fucking factory takes a month longer to open. It's not a hard-hitting headline. But if they ever did, I would expect 30, 40% fall in the stock. However, when things are good, they're plus 30, 40% on any sort of fundamental analysis. So congratulations to everybody in Tesla. Luckily for me, I'm always going to have a security blanket on stocks like that, NVIDIA, etc., because my retirement portfolio is filled with ETFs such as QQQ, FDN, IYC, all those things. So what I feature mostly on here is a retail individual stock account, but in the background, for the long term, you know, all that stuff's in ETF land. So Tesla goes up, my stuff goes up there. Tesla drops out, QQQ might go down a little bit, but it's got other people supporting it. So Do like ETFs for the close your eyes and invest approach. Where was I? Did you own TTD? No. I may buy it, but don't worry that PayPal, Visa, and MasterCard will be killed by a firm. Somebody just put that on Twitter yesterday, and I'm like, you've got to be kidding me. So I had to tweet back. I had to actually get into earnings reports to look through. PayPal's expected run rate for buy now, pay later is $8 billion, okay? And they're launching a couple new countries this year. They're international, by the way. International buy now, pay later. The end of the year for a firm, now the financial calendars don't align, but a firm processed 8 billion, this is gross merchandise volume, 8 billion last fiscal year, which just ended. So this whole thing that a firm is outsizing PayPal is stupid. And that's when you have to be careful that big numbers, okay, in headlines don't always add up to the bottom line. Now, a firm, I expect, will surpass PayPal's buy now, pay later business next year, because that's all they do. That's all they do is that one thing, buy now, pay later. PayPal has that plus a zillion other interests. So whatever, but I do start to get frustrated in FinTech rumorville lately. And yeah, I'm probably a little bit bitter because of Visa and PayPal, but I'm not worried about them whatsoever. Andy's here. He's buying SoFi. SoFi looked really good in earnings reports. They really did, and I have to consider that. I've been a SoFi customer before. I pump SoFi on this channel now and then for their loan product, which I found to be very good. So, you know, I need to put that on the radar. VKTX, I assume this is an ETF because I just spouted off a bunch of ETF names. Okay, VK, oh Jesus, Viking Therapeutics, is that what you were talking about? Unfortunately, that's not something that I would cover. Yeah, biotech, not really. But good luck. I mean, if you get a drug approval, you could really blow it away. JP doesn't like Chinese stocks, but couldn't resist buying BABA at 138. I don't blame you. That's one of, that does seem like a once-in-a-lifetime deal. I agree with that. Anyhow. Hey guys, I got to roll. It's almost noon here, and I got some other things going on, but hopefully you enjoyed this, and I really appreciate everybody coming out. I hope your investments are doing better than mine. October, November has sucked for me. However, that's the way it goes sometimes, and by using fundamental analysis with PayPal and Visa, stocks like that, I know that the bottom can only go so far. And that's really what you're looking through with fundamentals. So far, people have only been talking about the ceilings of stocks, right, over the past year and a half. And that approach, to be fair, has paid off handsomely. I'm not necessarily bearish on the market, but I'm always looking to prevent that floor where the stock crashes through the floor. So that's a lot what we do here, and I really appreciate you stopping by, except for DraftKings, of course. That floor on that one is pretty daggone low, but I've already explained that to you. So hope you guys have a good weekend. We'll see you on the next video.